ladies and gentlemen, we did it one more time. Now, I don't know if you guys can see this. There we go. Would you look at that? Nearly $28,000 in profit. So today we finally had a beautiful play after a rather frustrating week. Okay, so I'm going to go ahead and move my stop to break even, making sure we remove the risk. Again, we are about, at least I am, what is this, $12,300 in profit. Now, is there a chance it's going to reverse right back up to our entry and stop us out? Yeah, absolutely. So we're chilling here. Stops are again moved to break even. Why? Well, because we swept the low, which I had planned prior to even entering this trade. I knew that, okay, I'm going to remove my risk at this very low that we're looking at here. So here's pretty much how I establish whether, now is the time to move my stop to break even or not, because I know a lot of people out there struggle with it. So it's quite simple, right? Whenever you are inside of a position, so in this case, we're in a short, right? What I do is I pay attention to the leg prior to when I short it, and then I try and find, the price within that leg where there's the highest chance of a reversal to take place. So in my opinion, it is at this low right here, right? This could have easily been some sort of fast liquidity grab here, and we're just going to rotate higher. So out of everything that we're looking at here, this low to me is the highest probability of a reversal. And so I am going to make sure I remove my risk here, because if I'm right and this is going to push price against me, well, then of course I have protected myself by moving my stop loss to break even. And, a pretty good rule of thumb here is that once you're above 1 to 1R in profit, you can pretty much, with reason, move your stop loss to break even, in my opinion. Now, can it, bite can it bite you in the butt? Absolutely. I mean, you can easily get stopped out here and then, be proven right just a few minutes later. What can happen here is that the market then decides to come up, retest your entry, and then dump straight to your take profit. That's a known thing, right? I mean, we've all tried that, and it can happen, but over, an extended period of time, again, we're trading a probability-based model, right? And so over an extended period of time, the highest ROI outcome from my experience is, again, when you move your stop loss to break even, but it has to be done in the correct manner. A lot of people just immediately remove their risk because they're scared of losing. That is how you ensure to lose even more, right? So we're chilling here. Stops are again moved to break even. Why? Well, because we swept the low, which I had planned prior to even entering this trade. I knew that, okay, I'm going to remove my risk at this very low that we're looking at here. So when you have everything planned out before you actually hit the buy or sell button, everything is going to work out way smoother, because you don't want to sit there and be inside of a trade and then, oh, whoa, okay, where do I go break even? Where do I take my profit? All that stuff. You don't want to deal with all those thoughts and decisions while you're actively inside of a trade, because that is only going to increase the probability of you making a mistake. Okay, so it's starting to look better and better here, floating about $25,000 in profit. Now that, ladies and gentlemen, is exactly what we want to see. Now, again, let's not get too cocky too fast, because God knows how many times this week I have tried to be this close to my take profit, and then of course we saw a massive reversal. Well, actually, that was last week. Today's Monday, so let's hope that this week is entirely different. But from the looks of it, it looks exactly like last week. So hopefully, I mean, we can actually finish the run here down towards the low. Again, that's something a lot of people also have to understand. When you're inside of a trade, you have done your job, right? There's pretty much nothing else you can do. Whether the market goes up, down, or sideways is entirely out of your control. And so that's why I always tell traders, you have to control the controllables and then don't worry about anything else. What's out of your control is out of your control. Wasting energy on worrying about that is exactly what's going to, inevitably burn you out and make you jump into another industry, and you're going to face the same problem in that industry, and you're just going to keep rolling and rolling and rolling. And there we go. How beautiful was this trade? I mean, we were literally not in drawdown for a split second. Rarely do you catch them this well. I mean, have a look at this. You can see the entries right here. We sold at 65,976 and took the full profit at 65,678. The full profit of this play was 24,000 plus 3,000. So again, plus minus $28,000 in profit here. Beautiful trade. Right here is the entire trade that we ended up taking. And of course, I'm going to break down everything that went into this trade so that you guys can learn exactly how I read the market. So again, this is a 1 minute time frame. Now, if I jump into my exchange here, which again is WeX, you can see that exact same profit. So that's $27,963. You can see the execution here. We sold again at 65,976 and we took our full profit at 65,678. So it all starts on a 2-hour time frame, which I know to a lot of people is a weird time frame, right? Who uses a 2-hour time frame? Well, I do. So again, it starts on a 2-hour time frame. Now, overnight, right, we sold off entirely. We had a massive Sunday night sell-off, and of course, that resulted in an even bigger inefficiency. So, if we take the top candle here and the bottom candle here, there is a massive gap in between those two wicks, and that is exactly what we call an inefficiency. Now, this morning, I had one target in mind. I expected the downtrend to continue, but I wanted to see one target hit before that happens, okay? And that was 50% of the range. So here you have the optimal So here you have the Fibonacci extension tool setting, and right here are the actual settings in case you don't have it. Now, here is the thing. Whenever we get, such a large sell-off, well, then I expect the market to at least retrace towards 50% of the range before we continue down lower. And that is exactly what happened. So again, first of all, I waited for the market to visit a premium, which is just anything above the middle point, before I wanted to take a short. Now, after that happened, I zoomed into a 1 minute time frame, and this is where the magic happens. So obviously here in a 1 minute time frame, the market had been selling off quite rapidly, and we of course hit that 2-hour fair value gap right here. But as you guys can see, if we take, this wick and the bottom of the fair value gap, you can see that we have a bunch of inefficiency left here. And I pretty much expected the market to move higher, but reverse right back down to fill in that entire inefficiency. And as you guys can see, that is exactly what happened. Now, again, literally every single model that you see on this channel is being taught within my private community. And it's very simple. You just check out any description on any video and you'll find a link to both of my communities. And again, this is just where we give out signals. We have the best traders in the world in here. I'm telling you, I have only appointed traders that have proven themselves with a professional track record. And both of these traders have traded on stage. So again, I give out analysis, I give out outlooks, I give out macro reports, I give out signals. We have other traders that are consistently just putting out profitable signals. And I mean, the list goes on. And if that's of any interest, well, then check out the link down below. But how come I took a short right here? Well, I explain exactly why that is. Okay, so let's just zoom in here a little bit. We are again on a 1 minute time frame. Now, would you guys have a look at this? We swept a high, which is the one I'm annotating right here. And there's one thing you guys need to understand about exactly this. So whenever the market runs up or runs down and sweeps a low, it doesn't really matter. You have to pay attention to one thing. Do we get any follow through above that high or below that low? In this case, right, we saw no follow through above the high, right? We basically just peaked above, liquidated all the orders that were sitting at this high. And then, of course, we got this massive displacement candle. Okay, so that was the entire idea to begin with, right? Of course, we had that longer term target, which is that 2-hour fair value gap down here. But the internal market structure happened because I saw no follow through beyond this high. But I did, in fact, get the opposite, reaction to the downside. We got a massive displacement candle here. Now, again, displacement is just a fancier word for a candle that has a lot of volume behind it. It basically tells me that, okay, sellers are in control. Why? Well, because buyers can't push, price above highs. And as soon as they try to, sellers immediately step in and just overrule buyers entirely. And that's how I sort of gain my bias on an intraday time frame nearly every single time, right? So it's all about paying attention to highs versus lows, who is able to defend highs versus lows. That's really how I look at, internal market structure. Anyway, let's break it down. As soon as this candle here closed, I entered my short. Now, why did I do that? Well, for one specific reason, right? If I now annotate this 1 minute fair value gap that you're looking at here, I'm going to quickly remove this so we can see better. We have a 1 minute fair value gap here. And this is extremely important. We failed to move higher beyond that high, right? We basically just got a liquidity sweep above the high. And then we got this massive displacement candle that completely violated this bullish gap, right? And so that tells me that my theory about, sellers being stronger than buyers is probably correct. Why? Well, again, because buyers failed to push price above highs and, sellers had no issues in pushing price below a bullish fair value gap. So if this market was, bullish, first of all, I would have loved to see proper candle closures above this high. And then I would have expected this fair value gap to hold because, again, buyers would be in control. But that's just not what happened. And so my bias, combined with the 2-hour fair value gap that you're looking at down here, was, of course, just immediately short biased. So again, I entered right here. Let's pull back up that P&L tool. I entered right here. I got a little bit of a slippage or a bad entry. But again, pretty much no drawdown here. I mean, this was just a stress-free trade, except for the fact that when the market starts coming up here, a lot of traders will make tremendous mistakes. They'll try to micromanage their position and they will end up, either going out break even or they will just, close in a small profit here because they're afraid of the market going against them all the way back up to their stop loss. And so they end up making these management mistakes. I see it all the time. Here's the thing, guys, okay? You need a good reason behind everything that you do in the market, okay? As traders, we have pretty much no control. And so you need a reason to enter your trade, you need a reason to exit your trade, you need a reason to take your partial and move your stop loss to break even, and you need a reason behind your take profit. Let's break down the reasons that I had in this trade, okay? So my stop loss, first of all, was super close to this high here, and the reason for that is very, very obvious. If the market decided to completely go against me here and rotate all the way back up to these highs, well, then chances are I was wrong and the bulls are now in control. So this is a stop loss that immediately invalidates my original idea. And that is exactly what any stop loss should do. Because if your stop loss invalidates your trade idea as a whole, well, then when you get stopped out, you have no reason to worry. You have no reason to be angry or annoyed or overtrade or revenge trade or whatever. Why? Because you went out of that trade when you were supposed to. The market proved you wrong, which will inevitably happen to every single trader in the entire world. And so you just played the odds, right? And that's what we do as traders. And you move on to the next one. But only if your stop loss has a reason behind it. You see, the problem people make is that they have a tremendous reason behind their entry, right? Everyone knows how and when to enter their trades, but they don't really seem to care about their stop loss placement, their take profit, or break even, which all of those three things should be intact before you even hit buy or sell. And so my take profit here was obviously because this was the 2-hour fair value gap, and I expected us to revisit it, and so that's where I'm going to take my profit. Now, my break even was at the low that you're looking at here, and my analogy behind break even stop losses is very, very simple. I've gotten hundreds of DMs asking me, how do you measure whether now is the time to go break even? And it's really simple. All you do is figure out a point in price where there's a high chance the market is going to go against you, and that is exactly where you move your stop loss to break even. In my case, in this trade, it was this low that you're looking at here. So again, the market hit that low, and as I expected, we were going to get a reaction off of that exact low, and that is exactly what we got. Luckily for me, we ended up hitting my take profit. Had this been last week, guys, I'm telling you, last week was, crazy. I mean, I've never seen anything like it. Last week, this would have for sure gone break even, but luckily this week, the probabilities were on my side, and I'm very grateful for that. But that was pretty much the entire breakdown of this very trade. Now, another thing I do want to add is the importance of price delivery, okay? And that might sound crazy, but it's important where price is coming from. So another thing that I really paid attention to in this trade is where the market was coming from. So if I now grab my optimal trade entry and I draw it all the way up here, so from the high of the range all the way down to the low of the range, and then I, of course, change it to my optimal trade entry, you can see that we were delivering from the range optimal trade entry. And if you don't have the settings for this one, they are right here. You can pause the video. We were delivering off of the optimal trade entry of the entire range, right? I mean, if I zoom in here or even go to a 1 minute time frame, you can see it better, right? The market peaked right above the first zone of the 3, and then we immediately started going lower. And that, adds on to the idea that sellers are in control because optimal trade entry is holding, right? And so price was coming or delivering off of an area that I was satisfied with, right? And so you have to figure out exactly where's price coming from, what caused price to come down here, right? And once you figure that out, well, then you evaluate whether that's worth noting or not. In my case, I believe so, because there's almost nothing I pay more attention to than the optimal trade entry and premium and discount. Ladies and gentlemen, that was the entire trade and the breakdown of it. I really hope that you enjoyed. What an absolute pleasure this morning. I made enough money to not trade pretty much this entire month. I made enough money to, not trade this entire week. Now, only time will tell if that will happen. Nonetheless, I will see every single one of you when the next trade appears. I'm going to break it down so you can learn exactly how I read the market.